Good evening, everyone. Time for another silver update. Want to look at some of the previous trend lines that have been drawn. Have the $3 a month trend line that have been broken here, and we had a new downtrend trend line forming that was broken to the upside this morning, but then turned around and failed reversal. So, and then we have strong support at 28. Looks kind of like we're forming something like a downward sloping pennant. Those tend to be bearish, but they can also break to the upside, so we'll just have to wait and see. Some readers said that they were surprised that I called 28 as a place to buy, but maybe a little bit too early because we may be heading lower. We're going to see where we go in the next few days. As far as the buying this morning, we had sort of typical pattern that's been shaping up in the last few days. You had the 3:30 a.m. Action. Let's see, it's not pulling up on this chart. We'll go out to the 5-minute. 3:30 a.m. Let's see, where are we here? Yeah, we had the buying start. This is the Asian opening right here. A nice little breakout, and then a test, and then a rally back up. We got right about to the New York opening, and they absolutely crushed it. We were going to go up through. You can see we were in the process of breaking up through that line, forming a nice little cup, and everything was going great, and then New York came in and they just absolutely destroyed it. So we were starting to form up. If you go out to the daily, we were just starting to turn up here at this zero line, and it was flattening out and actually rounding off and turning up, and then that's right when they crushed it. And that's really common to see. A lot of times when the market is just about to make a critical turn, it's at a critical juncture, you'll see them come in and smack it really hard. So just to keep the existing trend going, that's pretty common. They probably are trading a lot of the same lines and a lot of the same patterns that everyone else is trading. So looking for a vulnerable point, as well as trying to switch the momentum to a different direction. All those things come into play. So we are waiting for some clarity in the after hours this evening. We're still showing weakness. We're down around 28.60. So we'll see if we can get back down to the 28, and then if we go through it or not. Out to the weekly, of course, we're still in a spike, and that appears to be crossing over. So we may see a downdraft in that. If you see when we crossed over here, we got a nice little downdraft. You can see that we formed a multi-year pennant out of this one, and we did the same thing here. This is a really big multi-year pennant that we formed. Then we broke out of it to the upside. So we may be forming some kind of pennant in here. We may actually correct back to here. This one, you can see this pennant corrected right back to the top of this last one. And this pennant was unusual because it actually crashed below and then came back up. And then this one ends up correcting to the top of this. So we may correct down to the top of here, which would be really nice for some people who are trying to get in. They might see a $22 buy price. I'm not going to hold my breath. The market seems very tight as far as the physical, but as I point out every day, this is the paper. So physical and the paper don't have to line up. Keep an eye on eBay prices. As I said before in another commentary, I was watching during the crash of '08, which is right here. And all during this crash here, all the way from 21 something down to below $9, I watched the prices for Silver Eagles on eBay, and during this entire time, Silver Eagles never went for less than $18. So as the price fell, the premium expanded. So a chart for Silver Eagles would not look at all like this. It would be much more flat, much of a slow rise. And I saw one of the other silver guys did a chart for Silver Eagles. It'd be interesting to see a price chart for Silver Eagles on eBay. I don't know if anybody can pull out that data, but my guess is it would be a slowly rising slope rather than this dramatic paper sell-offs that you see. And a couple of other commenters commented on a few of my videos asking about how they take advantage of these price drops, such as, well, you had you know, the violent ones like here. And this, when I usually do my buying, is on a violent price drop, say here to here, or here all the way down to here. You know, how are they going to take advantage of that when things move so fast? Well, I've pointed out in other videos you can do that. Both APMEX and Gainesville coins, they have real market prices, so they do move with this. Sometimes the premium over spot does not compress to the same extent that this does. It'll actually expand a little bit, but you know, you'll get if you look at the price of Eagles when silver's here at 31.20, and then you go ahead and look again when it's basically 28.20, it'll be almost $3 cheaper. So it does move with the price, it does move live. That's where you can do it at both APMEX and Gainesville. I wanted to talk about an article real quick on Zero Hedge, talking about the Contango that was crushed, and that this author's seeing a short squeeze being imminent. Don't really know if that's the case. He cites the 3 a.m. morning move, and there was quite a move up. We don't know. I haven't actually looked at the out months, but the net Dania price is calculated but from the nearest out contract. But just so people can understand what these terms refer to, you had two terms in the futures markets: a contango and backwardation. A market that's in contango means that it just means that the prices are higher as you go out the months. So in silver, I don't remember the exact delivery months. You have January, and then March, and then you have June, and then you have about 5 or 6 strong delivery months. What you do is you look at the price of silver in each of those months, and say if it's 31 bucks in January, it may be 32 or 31.50 in March, and 32 in June, and then 33 out in September. That's contango, and that means that as you go out on the contracts, the price of silver is going to be higher. That has to do with interest rates and carrying costs. That's a normal situation for most markets. Backwardation is the opposite. When a futures market is in backwardation, it means that the nearby futures month prices are higher than the farther out future month prices. And you can see that in the beans, you can see that in the grains and stuff like that. That has to do with things like delivery seasons, because crops and things deliver seasonally. So you can see unusual price situations where one month will be crowded and one month won't, or the price squeeze in the nearby and not in the far. So that's not a big deal when you see it in the grains. But when you see backwardation in any of the metals, gold, silver, or even platinum or palladium, that's a serious situation, because what that's telling you is that people are willing to pay more to get their silver now than they are to wait and potentially not get it. In other words, backwardation in the metals market means that people are afraid they won't get metal. It means they think that there is a serious shortage coming, and they're willing to pay extra to get their hands on it right now. So I encourage you to go and read this article. I'll do some links on the futures so you can study those, backwardation and contango. And we'll just wait and see what we do tonight, whether this shapes up to be a rounding off or whether we can actually rally up and take this thing out. And we'll talk to you next time.